All right, so Tesla's off like 25 or 30% from his high. And Kathy Woods was interviewed by Bloomberg, I think, and she goes, "We're more optimistic about our future portfolio given that ARK is off 30% from its high." And I did a poll on my YouTube channel. I said, okay, would you be more optimistic or less optimistic if you were down 30%? So let's see what the results are here. And we got poll question. Kathy Wood says this: we're becoming more and more optimistic about our portfolios in the sell-off. The ARK ETF lost 5.8% on Monday and 29.6% below its record close on February 12th. And I said, would you be more optimistic or less? Let me let him out. And 64% of you said you'd be more optimistic, and 36% of you said less. All right, so we'll see some comments here, which we'll read here in just a second. All right. So what is the reasoning for being optimistic or pessimistic? All right. Well, the reasoning is simple. What is the future potential of an equity that you hold? Now, we can use this for real estate. We can use it for bonds. We can use it for gold. We're just talking stocks right now. What is the future growth potential for the stock that you hold today? All right, so the future growth potential when a stock is down 30% is higher than when the stock is up 30%. Okay, it's just that simple. Things that are lower in value have higher upside than things that are less in value. I cannot stress this enough. And so using Tesla as an example, the Ford, or actually let's use Amazon as an example, because I was thinking this is interesting. I was looking at this yesterday. I said, wow, Amazon's PE ratio after it's taken on the chin is now like a 71. All right, yeah, so 70.5 is his PE ratio. That's after being down, dropping from, let's just see here, is fell from 33.89 to 29.51. So it fell 400 points. So basically his PE ratio 400 points ago was over 100. I mean, 70 is still pretty high in the nosebleed. Over 100 is certainly in the nosebleed. So what's Amazon's future prospects as we sit here today? Is it more upside or less upside? Well, the stock doesn't care what you purchase it at. It literally has no, I mean, this is where you've got to understand as an investor. The stock, the market does not care what you, Mr. Investor, had bought it at. It doesn't care if you bought Amazon at 10 or 10,000. It doesn't care. It just cares about its future prospects. And its future prospects, given that of a decline in share price and a lower PE ratio, are higher than it was 400 points ago. And the same goes with Tesla. The same goes for ARK. I mean, it cares not what you bought it for. So let's look at Tesla. And Tesla right now, PE ratio is 879, which is nosebleed. I get it, but still, that's significantly lower than what it was just 2 months ago. It was over 1,000. Same scenario. The future prospects for the stock you own today, if they're down 30%, are higher than what they were just 3 months ago because it's trading at a cheaper value. I'm just telling you, that's the way it works. Now, if there's no earnings, yes, I'd say, ooh, I don't know, man. There's no earnings. Now, ExxonMobil had no earnings or negative earnings last quarter. So people say, but Josh, Exxon has no earnings. Why would you be more optimistic? Well, because Exxon's a stable company. It's been around for a long time. It has some charge-offs and stuff. The earnings aren't going away forever. And presumably they aren't. It's hard to imagine. But either way, Exxon is not doomed to the extent that, like, what was the company I was researching? Pets.com. I always use that as the catch-all for the early aughts. Anyway, so a stock that is down in value, as long as it has earnings, has higher potential upside than a stock is up in value. I'm just telling you. Now, people say, yeah, but Josh, momentum. Momentum is a short-lived thing, man. Momentum, it just, yeah, for short-term and speculators, sure. Your momentum, you're like, oh, but if it's, I'm less optimistic because the momentum trade carries, and the momentum trade says, oh, what happened yesterday will have some effect on what happens today. I get that. That's short-term stuff, though. I mean, that's literally, year over year time. If you're investing for a year, you're a speculator. You need to be investing for the long term. That's how the money's made. Long-term growth. That's why stocks for the long run, Jeremy Siegel's book, makes so much sense. He's like, stocks for the short term is pure fiction. It's pure speculation, gambling. Stocks for the long term, 5 years, 10 years. That is where the value is. And so if your stock is down 30% and you think the long term, I'm going to ride it out, you're like, hey, absolutely. That just means there's more upside today. But I'm down 30%. It doesn't matter. If you held the stock when it's trading at 150 and now it's trading at 110, 3 weeks later, you're like, oh, now I'm more pessimistic. Well, that literally it makes no sense. Unless you're a short-term speculator, then I got no qualm with it. I got no sympathy. But if you bought ARK, I'm just using 110 for an example, 150, and you say, oh, I'm optimistic about the future performance of the share price, and 3 months later it's at 110, you're like, oh, I'm pessimistic. That's the opposite of what you should be doing. You should say, no, I'm more optimistic now. I took it on chin, but it doesn't matter. The future growth potential of a stock are always higher when the stock is down 30%, as long as their earnings. I cannot stress this enough. It's all based on earnings. Because remember, stock performance is future earnings growth and dividends. That's it. Future earnings growth and dividends. Now, people say, well, there's price appreciation or capital appreciation based on the share price. That's just the price on the PE ratio. So the higher people value those future earnings, the more they're willing to pay. That's fleeting. I mean, so a high PE, a low PE, you can't hang your hat on that. You can only hang your hat on future earnings growth and dividend yield. That's it, man. That's it. And people are willing to bid up a stock for future earnings growth. People are willing to bid down a stock for future earnings growth. At the end of the day, it's only future earnings growth and dividend yield. So let's read some of the comments here because they're spot on, man. So she stated exactly why she's optimistic. Typically, I know I would not be optimistic. Hopefully more like it. No, that's the wrong answer. That's the wrong answer. That's short-term investing, Tom. It's hard to be optimistic. My portfolio is dropping, but it's important to focus on the long term and know that pullback happens. Yes, well, yeah, the long term and know that pullbacks happen. The longer the run, the harder the pullback. 100%. That's right, Ollie. So, roly poly, Oli, he's soft and cute and round. You ever heard that video, that cartoon? Oh, big yawns. But no, you are more optimistic when the market falls. I mean, that's the way you should be because the market doesn't care what you bought it at. As we sit here today, you say, would I buy this stock today? If the market has given it 30% of the value off, and we're trading at a discount, the answer is yes, you should be more optimistic because why would you? I mean, all right, I got 100 shares of Tesla. Is 100 shares of Tesla worth more to me today or 3 months ago? It's worth more to me today. Simply because for the long term, Tesla stock is trading at a discount relative to what it was. Now, someone could say, yes, in the future, it'd be worth less. I get that. Again, that's speculative, though. It's speculative. We're not speculating. We're investing. I cannot stress this. Speculators don't make money in the long term. Investors do. Historically, I don't know if it will continue. But again, I'm going to the market today. I'm saying, would I buy 100 shares of Tesla today or not? If that purchase is contingent on what Tesla was 3 weeks ago, that's not, you're not an investor, you're a speculator. Now you could say, well, it's down 30%, so I expect it to go down another 30%. Okay, that's fine. And hang tight. But again, that's speculation. That's not long-term investing. Yeah, right here, if I was in cash, I'd be more optimistic in a sell of stocks. I'm in crypto and optimistic. See, the only reason, that doesn't make any sense. You should be more optimistic because the market doesn't care if you're in cash or in stocks. It doesn't. It just says my stocks are down, like my man Ollie here says. Focus on the long term and know that pullbacks happen. The longer the run, the harder the pullback, which maybe what we're going through now with Kathy Woods and ARK stuff. But the market doesn't care if you're in cash. It doesn't. It says, look, we are down, which means if you're in the stocks, you're sell it now. That doesn't make any sense. Why did you buy it at 100 to sell it at 70? If you're confident in buying at 100 and now it's at 70, why would you be even less confident? It doesn't make sense. Well, it could go down more. Then you're not an investor. You shouldn't be in the market. I think she loves the limelight too much. Nah, I don't think so. I don't know. Maybe, but all right. I bought this fund on February 12th, and a month later it's down 30%. I'd be changing my I'd be changing my underwear. I don't know if that counts as positive or optimistic. Speculation. That's short-term buying. You're chasing performance. I guess I don't understand the question. I'm always optimistic long-term. I don't think of my portfolio in terms of optimism. No optimism is confidence, no confidence. And the long-term outlook is the only way confidence can be determined and answered. 100%, man. Low price, less risk. Exactly. Higher price, the more risk for downturn. 100%. So the risk has already been established. You've already taken on the chin. So you should be more optimistic. I'm just telling you. Every great mark has one or two saying stuff like this. I don't get it. Buying opportunity. Well, not a buying opportunity if you already own it. That's for sure. So again, I'm talking about people who already own the stock. But good points there across the board. So anyway, this is why you're more optimistic. I'm just telling you, because you're like, okay, Tesla's probably. I don't know. Let's say take a look at GE. What's GE? I haven't looked at GE for a long time actually. Let's see what GE is doing. So does GE have positive earnings yet? Yeah. So GE again is back to having a positive. Look, I haven't looked at anything in terms of how they're getting their earnings, but they're back to 24.6% PE. They got a yield of their dividends got spanked, but because they've been cutting like crazy, which probably is going to happen to Exxon. So that yield is at 0.29%, which isn't much, but so GE is up off from it's up 25% in 3 months time. So that's not so bad. GE was trading at 7 at some point. Look right there, December 2018 it was trading at 6.5. Crazy. So GE in 3 months, 3 years time is a 2.5 years time has almost doubled. No, it's basically more than doubled. So there you go. So when you're looking at ARK, you could also look at GE and say, wow, GE's doubled in a year's time. So pretty interesting. Anyway, that's your investing thing for the day. All right, love to hear your comments. We'll see you